Good afternoon. Michelle Stricklin here from Meliora Consulting. We are starting a new segment. It's questions we receive from clients and just wanted to answer to the broader population. If it's something that resonates with you, that's awesome. If you have another question, please share. Please send it to our email, support@melioracpa.com. Hope you enjoy, and we're going to continue doing this series. Thanks.
Hi, Michelle. In one sentence, what is the biggest tax mistake you see growing businesses make?
I see a lot of businesses going to TikTok for tax advice, and a lot of the times advice on TikTok can be really broad, and the answer to a lot of questions for taxpayers is it depends. It really depends on like your facts and circumstances because, a lot of people, we're all unique. Our businesses are unique, our like personal tax positions are unique. So the answer is it depends. And it's just, you can't just take what you learn on TikTok, but it is a good like conversation starter.
Okay, great. What made you leave Big Four and corporate tax to do this?
Oh yeah, so my background is I started off in Big Four public accounting. I was at KPMG and Ernst & Young, and I worked at a couple public companies in their internal tax department, kind of running the day-to-day operations. It's a lot, especially when you're dealing with SOX controls and internal audit, external audit. I really started my firm because I have young kids and I just needed more flexibility and wanted to pick up my daughter from kindergarten at 3:30 when the day ended. And so that's been my driver.
Awesome. Okay. Everyone talks about saving money with an S corp. What does that actually mean in plain English?
Sure. So S Corp is a super hot topic, and everyone's wondering, like, is it for me or, what's the deal? So an S Corporation, you make an election, and it's a separate entity. So it doesn't get included on your personal tax return. It's like another entity. And the benefit is that the net income from that business doesn't have the self-employment tax that would be attributed to it if it was an LLC. So you get to save on the self-employment taxes. And there's also benefits that you get to pay yourself as like a W-2 employee, and you can contribute towards like your retirement and have benefits like as if you were an employee from that perspective. So there's a bunch of great benefits, but it's not for everyone. So there's some business types where it's not the best answer, and real estate is one of them.
Okay, great. You just helped a client with a vehicle question. Can you break down how a business owner can get reimbursed for the personal vehicle without it being taxable income?
Sure. This is a great question. And there's a couple ways to kind of approach this. And it depends on one, like your entity structure, like if you have an S corporation election, or if it's just like you as a single owner LLC. So that one can change the answer. And then two, it depends on if the business is buying the vehicle or if the owner, if the person is buying the vehicle. So the goal is to get, as much depreciation, bonus depreciation, so you can, claim that expense in the year. That's, I think, the main attraction for getting the vehicle through the business. Obviously, it has to be business usage. So you're going to need to meet like the 50% business usage. And then if it's purchased by the business, then it's much easier to take that depreciation deduction, which is a great, can reduce your taxable income. So that's like a win, right, for the business. If it's owned through the personal side, then you can do something called an accountable plan. And we can talk about that, as a totally separate video topic, but that's going to come into play as an S corporation. If it's just like an LLC and you're the owner, then it's not quite as big of a difference if you buy it versus the business.
Okay, great. So let's talk about a 1031 exchange. Can you explain that to somebody who has never heard of it?
Sure. So 1031 exchange, that is an amazing feature in the tax code. It's incredibly beneficial, especially if you own property. And property is like a broad category. That includes like, rental property, land, farms, oil and gas wells, or interest in, the oil and gas. It's also going to include your like water rights, certain types of water rights. So the benefit is that when you sell, say, you have a rental house and increased in value like 5x, right? It's in California or it's in New York City. And if you sell that property, that's a huge gain that you would owe tax on. The benefit of the 1031 is that you get to exchange that and you basically defer paying tax on that gain until you sell that later property. There's all sorts of like restrictions and stipulations, but being able to kind of kick the can down the road on paying capital gains on that property is a huge benefit. Super well known like in the real estate world. But if you are an individual owner and you have a rental property, you could also qualify for it as well.
Okay. What's the number one deadline business owners miss with the 1031?
It's 45 days to identify what you're going to exchange the property for. So if you sell your rental property or an investment property, you have 45 days to identify, and then you can't like collect the funds. You need to work with a qualified intermediary.
Okay, very cool. If someone's thinking about buying a business vehicle before the end of the year, what should they know about bonus depreciation?
So it's going to be super important who buys the vehicle. So if you have an S corporation, if you can have the business buy it, it's a better case for depreciation deduction. If it's the individual that buys it, then make sure you have an accountable plan set up and you follow through on your monthly or quarterly, however you do the cadence on the reimbursements, and always track the mileage, because that's always a common kind of thing that people forget. So track the mileage and identify who's going to buy the vehicle, and double check the weight, because there are different limitations if you buy a sedan versus like a really heavy SUV or a truck.
Can you tell me about those differences in regards to a regular car and truck when it comes to tax write-offs?
Yes. So the heavy usage SUV, once you hit like 14,000 pounds, that's when you're going to be in a different category of what you can deduct. The sweet spot is like those heavy SUVs, like a Ford Expedition, 4Runner. They're going to qualify for like a bonus depreciation where you can take like 100% of the depreciation in the year you purchase it. That's the sweet spot. And so that's, under 14,000 pounds. And then if you buy, like they call it a luxury sedan, something that's going to be incredibly expensive, like over $100,000 on a car, there's going to be a cap on how much depreciation you can take.
Okay, great. Okay, so now tell me, what's the difference between what you do and what a typical CPA firm does?
Sure. So what's really common for CPAs, and they're all really busy and they have lots of clients, it's usually get me your information, I'm going to create a tax return, then I'll see you in a year. And so that's kind of a very transactional relationship, and that works well, for some CPA firms. My model is really different. I develop a relationship with clients and I work with them at a minimum 2 times a year, having meetings, either face-to-face or video. We walk through like a tax projection, and I'm available for questions. And so it's a different model, and I don't try to do like a high volume tax return. And so you get more access to me. So that's the difference.
Oh, awesome. That's a great bonus. Lastly, if someone's listening and thinking, I don't even know if I need this, what should they do first?
Sure. So the first thing is you can schedule like initial consultation. But the thing that's going to be like the biggest benefit to you is going to be a 1-hour tax strategy. And so you don't have to sign up for like a 12-month plan or have me file your tax return. The 1-hour strategy is a great way to see what it's like working with me and my firm. And we can talk about anything that's been on your mind, and you can fill out a questionnaire, and you have an hour, and I'm, dedicated to making sure I answer your questions, and I get your documentation ahead of time, so we make the best use of that hour.
Okay, great. This was all very informative. Thank you.
Thanks so much. I love answering client questions. So we'll have more in a couple months, so send them our way.